Reading order flow is what took me from a 30% strike rate to a 50% strike rate to a 70% strike rate. And so the reason order flow is so powerful is that you can see the interaction between buyers and sellers inside of the actual candles. So here on a footprint chart or on a candlestick chart, sorry, it looks very choppy, right? All you know is there's a couple of bounces here and a couple of bounces over here. Now, what you miss is the true theory behind what's going on. So if we just take a look at the break and retest over here, when price comes into a fair value gap or a key level, the first thing I look for is a break above the level. And I simply mark the level or the candle that's above the level. Now, what I see is a lot of traders get trapped out because a lot of traders try and enter here and they have their stops too tight. And typically what happens is they take some kind of a loss, right? Now, what I like to look for typically is I will not enter here. I will look for a break and a retest, and I want to see what is going on inside of my actual level. So here in yellow. Now, when we go to the footprint charts give us a much clearer indication as to what's going on. Here, for example, we had this huge aggressive seller, negative delta, red delta, before the move to the upside, right? Same over here, aggressive sellers break to the upside. And so this here indicates that the market is ready to go long because the sellers have aggressively failed. So we can now have our stop below here and we can target at least a 1 to 3 risk reward in a bullish market. So these kind of trades don't play out every day, and you certainly can't really catch them unless you have order flow. So the order you want to approach the market is having a key level, an entry, and then your order flow.